Good Tuesday afternoon, everybody. Morning, afternoon, wherever you are. Sandip, how are you? Good to see you. I am live back down here on the floor of the CBOE. And you know what? There's been some pockets of action this morning. Not overly busy, but we are seeing S&Ps on their highs of the day right now, up 25 points. We're seeing crypto-related stocks. Bitcoin still struggle a little bit. But overall, market is moving higher, and the VIX in the 13 handle now, 1390 in the VIX. Unbelievable here, guys. Talk about it all the time. Talked about it on Fox Business yesterday. Talked about it on Schwab. You know, if you want to get some protection in this marketplace, in my opinion, it's about as cheap as it's going to get right now. Even though we're coming into, holiday season, Santa Claus rally, the best performing time of the year, which we're going to talk about shortly here. To me, lots of things that at the drop of a bucket can kind of derail this market, or at least, give it a quick setback. And remember, buy when you can and not when you have to. Remember that. Okay. Lots of put buyers coming in right now that I'm seeing in the triple Qs. Seeing some big puts go up in the S&Ps right now, even with us at the high of the day here. So we'll have to see how this reacts the rest of the day. And remember, full day trading tomorrow, half day on Friday. Obviously, we're closed on Thursday. Tomorrow, guys, tons of eco data. Okay. This afternoon, we get the Fed minutes. Okay. Probably aren't going to say a lot that we don't already know about. We get the Fed minutes this afternoon. Tomorrow morning, we got PCE, GDP, personal spending, durable goods, and because of the holiday on Thursday, we get weekly jobless claims. So honestly, whatever the Fed says today, that could absolutely change. The narrative could absolutely change in a heartbeat tomorrow morning. I know as of a couple minutes ago, markets were pricing in about a 58% probability or so that they would still cut 25 basis points on December 18th at the next meeting here. See if that happens or not. How does everything look and sound, everybody? And thank you for joining us. Yes, new angle today. Absolutely. Get shuffled all over the place here, depending on how the market makers are lining up in the pit here. Okay, we are good. All right, guys, we're going to pick up. We're going to kind of continue from where we were yesterday, what we talked about Santa Claus rally. I want to talk about historically what happens at different times of the year. Obviously, since we're in Santa Claus mode now, seasonality, this is what we are going to talk about. Okay, so we typically see very nice gains in December, 1.25%. Okay. From now, Thanksgiving through the end of the year, 71% of the time, the S&P has climbed through now to the end of the year. This week, and there's remember, no trade on Thursday, half a day on Friday. This week is historically bullish. Okay. And then going along with that seasonality, we're going to touch on what that sell in May and go away is. But here's a chart on seasonality showing you month by month over the last 25 years in the S&Ps. Boy, I got to figure out a way to get this cord behind me here. That's uncomfortable. Okay, and you can see here. Remember what happened September this year? Everyone was expecting this because historically that is the worst month of the year. What happened this September? We had massive gains. Okay. you can see right here, this is us coming into the end of the year right here. Okay. Does it mean we're going higher? No. Chances good based on past performance, historical data? Yes. So this is your seasonality. And as you can see here, there's only 3 months of the year over the last 25 years that have averaged negative returns on the S&Ps. That's pretty impressive. Okay, best and worst months of the year, everybody. Okay, and this is going back 20 years. This is now a real good breakdown of the seasonal nature of trading. Okay, and this breaks it down for the S&Ps, the NASDAQ, and the New York Stock Exchange NYSE composite here. Okay, we've got up months. They pretty much all coincide together. You got your weak months, and this is the 3 that we were just looking at on that chart. And the best 3 months, it's not even December, guys. It's not even December. It's November and that period of Thanksgiving going into December. Not that December is a bad month. It is not. It is not. Okay, so you got 20-year averages here. I think that is pretty helpful. And then this year, and we talked about this briefly yesterday, this year, because it's a presidential election year, that skews things a little bit. So you can see on average, okay, on average, Thanksgiving week right here. So this week, 3.5 or 4.5 trading days. 3.5 trading days, my bad. 3.5 trading days, 28 basis points. We would take that. But then here's that almost 1.5% or so, Thanksgiving through the end of December. But look at this outlier here. Okay, presidential election year, almost a 1% gain this week. Now, I don't think we're going to get that this week. Who knows? Never know. We got a full day tomorrow and a half day on Friday. Okay, but what's interesting to me on these stats here is looking here, Thanksgiving through the end of the year, typically 1.5% or close to 1.5%. But in a presidential year, it could just be an anomaly. It's not that much different. Slightly lower, 1.38%. Okay, bottom line, seasonality. Seasonality, this is a very strong period of time for the markets. Okay, now we're going to discuss, this one might be a little, let me blow this up actually a little bit here. Let's see. Okay. Why does this happen? Right? There's got to be a reason why this stuff happens, why at different times of the year we are seeing different returns. Okay. And you can see on here, depending on the time of the year, there's all sorts of rationale, all sorts of, reasoning for why the market may move. You've got your back to school effect in the fall. Okay. You've got calendar effects. You've got economic reports and earnings. You've got sector specific trends, sell in May and go away, which we're going to talk about, triple witching times, which happens 4 times a year, weather and natural cycles. Okay. So the bottom line is, let's talk first about that sell in May and go away, which this year didn't really work that well. Okay. And the sell in May, go away thesis or theory, okay, it's a well-known saying based on stocks supposedly underperforming during those 6 months, May to the end of October. Okay. And people will sometimes look at that and say, I'm going to cash at the end of April, and then I'm going to buy back in November 1st. Okay. So from that November 1st through April period, okay, that we'll call, I don't know, the winter period as opposed to the sell in May, go away. Okay. However, on a seasonality basis, if you were to break it down by season, okay, summers actually outperform winters, which is unbelievable because if you adhere to that sell in May, go away, okay, and then put all your money in and let it go for 6 months through the winter, you'd actually have a poor return. You would actually have a poor return. Okay, and it's pretty significant difference. It is a pretty significant difference. So just to put that into context, for the last, since 1990, so it was 34 years. Okay, since 1990, we're talking about the summer months, okay, May to October. Let's put this up here. Okay, May to October, since 1990, 3%. Okay, and that is in the S&Ps. Okay, November to April, double, 6.3%. Okay, so there's obviously a lot of nuance to timing in the marketplace, right? But just to say, I'm going to buy it this time or I'm going to sell it this time because, that's what the adage is. That's what the saying is. That's what the data tells me to. Probably not the best thing to do. Okay. If you are, let's separate trading and investing. Okay. If you're trading, I want to be here every single day of the year. I don't care if it's 90 degrees in the summer or 20 degrees below zero with 40 inches of snow in the wintertime. I want to be here trading. If I am investing, okay, if you are investing, typically buy and hold is the way to go. You are never going to, your investment advisor is never going to time the market perfectly. You will never hit a low. You will never hit a high. Okay? Follow these trends, and I think you probably don't do any better. In fact, you probably do worse than literally just buying and holding. Does that make sense to everybody? Hopefully here. I want to see what's going on here because it's actually, yeah, it is busy here, guys. It is busy. I don't know if you guys can all hear behind me all of the activity or not, but there is definitely some trade going on here. All right, guys, here we go today. Groucho says the word of the day for the wheel today is gobble. It is gobble. All right, let's see those wheel entries come in. There we go. Bear, you are the first one up here. You got Gus. All right, Robert, if you win again today, Robert DB, if you win again today, I literally am going to go out and buy lotto tickets for tonight. And I don't even know if there is a lotto tonight, but if you win, you should also. You should also. Black Lion with the double gobble gobble. All right. Interesting. All right, guys, let's take Groucho off here for a second. Let's look at Microsoft. Okay. The reason I want to look at Microsoft here, guys, many of you who are tuned in here know we have a position in Microsoft that expires this Friday. Okay. Now, the reason I'm bringing this one up is we have the 430, 440 call spread. Okay. We own that. And we are short the 445, 450 call spread. Okay. That is our position. The stock has really done nothing in the last couple of weeks. made a decent move at the end of the day yesterday, and today it's rocketing. It's up almost 2% today. It's up about $7.50, and it is approaching where our position is. Okay. Now, based on what we always talk about, where a position maxes out. Okay. Right now, would we rather have the position that we have, long the 430, 440, or would we rather have the opposite? Would we rather be short the 430s and long the 440s? What do you think? Ooh, Alphabet. Alphabet's getting close also, guys, for those of you who are looking for that addition to our position. It's got to be just a penny or two away. I'll check that in a moment. Okay. But what do you think the preferred position would be based on what we always talk about? Okay, Don, short the 430. Anybody else? Anybody else besides Don? Opposite. Hamont. Okay. Yeah. As it stands right now, we would rather have the opposite. Why is that? Well, we know we always want the market to move to our short strike. What we really don't want it to do is to move to our long strike at expiration. Okay. That means for the same reason we wanted to move to our short strike, which is so all of the theta comes out and the extrinsic value moves to zero, which is great because that is the option that we have sold. Well, for the same rationale, for the same reasoning, we don't want it to move to our long strike because we don't want all of that premium. We don't want all of that extrinsic value to come out. Okay. So in this situation, we are a little bit in a bind right now. Obviously, if we get another big move in Microsoft, we get another $6 move, even $3 or $4 move would be great. Fantastic. But if the stock just kind of tops out right here, that's going to pose some issues for us. So we have to make sure that we are super, super diligent on how we manage this. Okay. You can see right now, this thing's trading right around 80 cents or so. Okay. That 80 cents is all premium, is all extrinsic value right now. And with only including today, a little bit more than 1.5 full days of trading yet, that's going to come out really, really quickly. So we really have to be cognizant of that. The best thing that can happen here is obviously a continuation of this move away from our long strike and towards one of the short strikes. Hopefully that makes sense to everybody, and we certainly will manage that. Okay, we certainly will manage that. All right, guys. Rapid fire time. Rapid fire time. Give me some stocks you want to take a look at here, guys. I'm watching here. Bitcoin was making a rally. It was down only about $900 just, I don't know, about 10, 15 minutes ago. It's now down over 2,000 on the day. That 100K seemed pretty elusive. Okay, Livin, Livn. See what kind of stock that is. Live in. There we go. It's definitely not Live Nation. It's Live Nova. And I'm not even going to comment on this one. I mean, I can look here. Barely trades any options. Would be impossible for us to trade this. I mean, it's hovering right around the 50 and the 200 consolidated. To me, all I see here is this thing's ready for a breakout one way or the other. Definitely not anything that we would put a position on. Salesforce had a double top yesterday. Okay. You can see it right here. Had a double top here. If we were to get back to that same area again, and that double top is what, right at 348 or so, I'm looking for a breakout. One of the things I like to look at is when a stock it goes that third time, either at a top or a bottom, test that bottom. I like looking at the follow through there. So Salesforce CRM to me right now, I wouldn't do anything. If we get up to that 348, that same area that had double top that has been big resistance, that's when I'm looking for it to break through. Snowflake. Let's get you on the board here. Snowflake is a very hard one to fade. Okay. We've got a couple of gaps here, upside and downside. We've got the upside one from their earnings just last week. Okay. Massive gap right here. And then we also have the opposite way, this gap to fill basically from a year ago. Okay. It's pretty much in no man's land right now. If I was going to lean one way or the other, it would probably be a little bit bullish. I think this actually would set up really, really nicely for a kind of neutral trade, maybe with a bullish bias. Problem with that is, and there are various ways setting up a neutral trade here. Look at this here, guys. Look at that. If I was trading, if Snowflake was one of the stocks I was trading back on the floor right now, and Snowflake wasn't even listed when I was trading on the floor here, boy, I'd be looking to buy as much premium as I could. I'd be looking to buy as much Vega as I could. Look how cheap that is. Okay. This is actually, to me here, a really good opportunity to do a strangle swap, buying time for a move in either direction because volatility is so incredibly cheap. Does that make sense to everyone? So maybe sell, out of the money call, out of the money put, maybe the 140 and the 200 in, going out 2-3 weeks, maybe a month from now, and buying out 2 months, 3 months from now because vol is so cheap. Okay, let me put this guy back up here, and then we're going to look at SMCI. Amazon I've seen come up a few times. Alan, I know why you're asking about Marvell. For the same reason you asked about that Microsoft put spread earlier, right, Alan? Does that have anything to do with Charlie and AI? What do you think? Should I give everybody a freebie here? Should I give everybody a freebie? A freebie AI pick? Let's do it. Let's do it. Let's go right to Marvell here. Okay, Marvell. Pretty sure a signal just went out a short while ago. I don't know, maybe half hour, 45 minutes ago, to buy the 40 Delta call expiring out in a few weeks. Now, when Charlie and I talk about AI picks, okay, or AI positions, I will always turn them into a spread. Okay, so the 40 Delta call especially if you're looking, just going out next week, because earnings are next week on December 3rd. The 40 delta call is going to be like the 94 strike or so, just slightly out of the money, maybe the 95 strike. So what I would do based on that, guys, I would look at that and say, okay, AI is bullish. Okay. They want to buy a slightly out of the money call. How could I, because of earnings, because earnings is coming up and we know there's going to be what? We discussed this last week. There's going to be a massive IV crush. Okay. How could I possibly look at something like that and say, all right, let's take advantage of that? Okay, let's go through the process. Let's go through the steps here, guys. What is the expected move in Marvell for earnings next week? Okay, call it right around $10. Okay, right around $10. So we're going to target 103 on the upside or something just shy of that. So the way I would look at this, especially knowing that AI wanted to buy the 40 delta call, is I might sell next week's 100 strike call, and I'm going to put in our adjustments of volatility here. And then by the following week, I want to make sure that I'm doing this with a delta bias, a positive delta bias. I want to make this a diagonal. So maybe I buy the 40 delta call going out in 2 weeks instead. And I'm selling, a 30 delta call or so. So the way that I would do this is I would probably look at doing a spread like this. Okay, I know I'm doing this on the fly right now. If I took a little bit closer look, maybe I tweak the strikes just a little bit. Okay, but let's say you pay $1.50 for this. Okay, let's say you pay $1.50. Okay, if we look at what the potential risk P&L chart looks like for next week, because next week is earnings, pretty good return up here if we had paid $1.50. And yes, this is a bullish position. Pretty good return. Obviously, you buy a call, if you just have the naked call and the stock skyrockets, you're going to have a better return, right? This is hedging your position a little bit. The reward to risk on this is still pretty darn good. Mike, final chance, right? Guys, here it is right here, guys. Giving you one more minute. One more minute to get your entry in if you haven't already. I should have had a turkey up here instead of a duck, but that was the Groucho Marx thing. Or, as John Madden used to always have, a turducken. How many of you ever saw the turducken on Thanksgiving football? Right, combo of the turkey, the duck, and the chicken. All right, so that's what I would look at in Marvell. Last one I want to look at here. Okay, we're going to look at Amazon. Amazon already trading off of all-time highs, but has made a really, really nice bounce. Really nice bounce off of some critical support. Really nice bounce off of some critical support here, guys. Again, kind of in no man's land. If I was going to lean this one way or the other, it would definitely be on the bullish side. Let's see what implied vol is doing. Implied vol is really cheap. You're welcome, Alan. Implied vol is really, really cheap. Okay. Another opportunity maybe setting up for big move either way by doing a strangle swap or a position similar to that. Come on, Microsoft. Got to get to that next level here, kid. The wheel is officially closed, I'm being told. Thank you, Mike. All right, let's get this guy up here today. And there we go. There it is. Oh, this one is really full today. Woohoo! This one is really full. Hang on, I want to try and make this bigger if I can. I don't know. Oh, there we go. That's probably about as big as I can make the screen here, guys. Okay. Mike, is this the fullest we've had? I think so. I think so. All right, guys. Need y'all to smash the like button. And you know what? We're going to do 2 winners today, holiday special. And if Robert, if you're one of them, I am running off the trading floor right now and going to the first place I can find to buy lotto tickets. Exactly, right, Bear? You would think that the guy like sent in an algorithm to just have it land on his name. All right, let's do it, guys. Here we go. Spin number 1, Robert. If it is you, man. Oh, it just passed you. This is Hemant. I think we got a new winner today. Hemant, are you here? Oh, Alex. Alex, you're coming in next week, right? Did Allie tell you we are going to the Bulls game next Monday night? Alex Hinojosa, who's here with us today, guys, is flying in for our fly-in event next week to work with us on site here in person. And we're taking our students here. Hemant, beautiful. And we are taking our students to the Bulls game next Monday night. All right, let's do one more here, guys. One more. Here we go. This one better not be Robert either. Oh my God, Alex. And this was not a setup. That's unbelievable. Unbelievable. Alex, you'll get yours in person. How about that? We'll wait to give that to you in person next week. That's unbelievable here, guys. Okay, Hemant, make sure you send me an email, prosperswag@prospertrading.com. All right. Guys, appreciate you. Have a great rest. Oh, Bitcoin is really getting hammered now. Have a great rest of the trading day. For those of you that might be taking off early for Thanksgiving, if I don't see you tomorrow, happy Thanksgiving. I will be here tomorrow. Markets close Thursday, half day on Friday. All right, everybody. Have a fantastic rest of the day. Thanks, everyone.